I'm Corbett Wall with USDA Livestock and Grain Market News, here with your weekly feeder and stocker cattle market summary for the week ending September the 6th, where yearling feeder cattle sold steady to $2 higher. Your full advance was fully noted in your direct trade areas, not so much in the sale barns because of lighter receipts. Calf market, steer and heifer calves were unevenly steady. In the southeast, it was largely steady to $3 lower, while in other parts of the country, the market on calves was mostly firm, albeit on lighter receipts, and all of these lighter receipts due to the Labor Day holiday. In any part of the country you look at, most of your bigger sales are on a Monday. That's the preferred day for an auction. But with Labor Day falling always on Monday, most of your sales are going to be closed, and this time nearly every sale barn was closed for Monday, and it was mid to late week before we even started seeing any significant trade in the auctions. Most of your Tuesday sales were light, and just a lot of uncertainty about the market. This yearling market's been so good. Most of your sellers were a little uneasy about coming in after we haven't had any sales for a while. And so your Tuesday market was light. Wednesday we kind of got back to regular business, and it was pretty evident that demand was still good for all classes of cattle. Now, one sale that wasn't closed on Monday was Torrington, Wyoming, Torrington Livestock Commission Company there. They always have a Labor Day special. They had a special on Monday with 6,500 head on offer. Most all the cattle just sold really well. Couple of outstanding sales there, some big steers, 247 head string weighing 1044, bring 143.50, and then demand was also good on your light steers. Had a lot, 46 head of 353 pound little steers, bring $2.29 a pound. Further north and west there, or north and back east to Hub City, livestock market at Aberdeen, South Dakota, they had a load of steers weighed 858, bring 161. So the market's still awful good, but this yearling deal is noticeably better in the northern half of the country. There's more availability of feed, albeit we've had some hot weather across the corn belt there, and maybe the corn doesn't look quite as fancy as it did a month ago. For the time of its stage there, but we're starting to cut some silage up north. They're cutting it down south too, but up north your corn crop is pretty immature, and but they are starting to chop some of that, and the ones they're chopping those fields that don't look very good. Now they've got some fields that look excellent, and they think they're going to make high yields there, but starting to chop a little bit of corn, make some feed. It's going to be kind of worth the money for a good source of feed right there, your silage. So you're starting to see a lot of these farmer feeders in there picking around and bidding on cattle against these bigger feed lots. And in almost every sale that you hear from north of I-70, we don't have that many small feeders anymore, but definitely a lot of these smaller lots, a lot of these smaller farmer feeders that maybe haven't used their lots in a while are breaking those things out, and they're going to be feeding some cattle. So there's a lot of demand for big feeders up north because we have farmer feeders in, but also because our yearling numbers have been light in the northern half of the country all summer long. And your calf demand remains pretty good in most all areas. Now this week your southeastern markets were lower, mainly because a lot of the shippers didn't think they could get enough calves to send back west. Some of your western orders maybe weren't interested because of the holiday week, and that should bounce back. Now when you get out west and in the Midwest where those calves are starting to come, we're starting to see more new crop calves every week. The market was just firm. Basically, it was just firm because it didn't have a good enough test to really call it much higher. But calves sure selling well for two reasons. The one main reason is because just the comparison to the value of the heavier feeders. So, if you've got 6 and 7 weight steers bringing $1.70, you're probably not going to hesitate to give $1.90 for some 4 weights, or maybe $2 a pound. That's probably the biggest reason. But also your forage opportunities this late fall and into winter are probably better than they've been in several years. You get in the eastern half of the country, and you've got some good pastures still where normally they're grubbed out this time of year. They've put up a lot of hay, and there's a lot of growth in some of these pastures going into the fall. Your winter wheat grazing in the southwest is probably going to be better than it ever has. They've had some rain. Of course, it's been hot there too, so it dries up, but moisture levels are probably going to be enough to at least get a decent stand on that wheat once they get it in the ground and getting ready to do that. So probably going to at least have something to turn out on, and then should they get some light snows early in the winter there or some moisture, then that should keep up. But your growers and your backgrounders have had it really good here the last few years. Had it really good this year, being able to mark those cattle up in price plus put pounds on them. So they're really happy, but they would really like to see these cattle feeders make some money. There's not that many independent cattle feeders left. It's mostly corporate feeders dominating the cattle feeding industry. These fat cattle, if you just base on what those cattle cost going in, what it costs to feed them, and what they got paid for them, if you just look at that without any risk management, these fat cattle have lost money for nearly a year, and those losses have been ranging anywhere from $75 to $200 a head, and some of them a lot more than that. But these guys need to make some money, and you see your backgrounders and your cow-calf guys and your cattle growers worrying about that as much as the cattle feeders. They want these guys to stay in business. They want them to start making some money. These growers, these cow-calf guys have been building equity in their operations. Your independent cattle feeders have been losing equity in theirs. But still, even though these backgrounders and cow-calf guys have been building equity in their operations, the land values have gone up so much by all these farm grounds selling so high, these astronomical prices, especially in the Midwest, that in almost any part of the country, it's not feasible to buy land just knowing that you're going to run cattle on it. You can't pay for land just running cattle on it, even at these high prices, because the farming industry has driven these prices so high that it's just not feasible at all. And you have to be looking at that land as a real estate investment. You can't pay for it whether you're running cows, whether you're grazing cattle, for sure. And it's so much easier to rent the pasture than it is to buy it, that you just can't do it if you're a cattleman. Fat cattle market steady again in the Southern Plains this week at 123. Market was tougher in the northern feedlot areas early in the week, and maybe starting to get a little better late in the week, but still steady to lower. They sold cattle up north earlier in the week at 122. On Friday, Nebraska was passing bids of 123, hoping for 124, which would just be steady. And on a dress basis, 1 to 2 lower from 194 to 195. And your regional weighted averages this week in the north central states, a 700 to 800 pound steer would cost you 163.28, compared to 161.75 last week and 147.18 a year ago. Down in the south central states, 700 to 800 pound steer cost you 156.02, compared to 155.06 last week and 143.05 a year ago. Down in the southeast on light receipts and a tougher market, 5 to 6 weight steers, 155.53 compared to 157.38 last week and 141.49 a year ago. That wraps up your feeder and stocker cattle market summary for this week. Check out our website for more market information at marketnews.usda.gov. And from the Regional Market News Office in St. Joe, Missouri, we'll talk to you next week.